I flew on American Airlines several times, and it seemed strange that they were declaring bankruptcy. I really didn't think it was going to go bankrupt, so I made the investment. I think it went up over 6,000% since then.
Hey, I'm Dan Toomey. Welcome to Point of Return, where we learn from regular folks, not financial advisors, about the best investment they ever made. We're going to show you how one business's moment for panic can be another investor's moment for profit. That is, if you can stomach the ride. Today, we're talking to Tom Handy, who we're gonna call the bankruptcy bettor. The company Tom invested in was American Airlines. You may know them from their slogan, "At least we're not Spirit." Now, what you gotta know about the airline industry is that it's volatile. Stock prices for major airlines fluctuate as demand for travel goes up and down depending on a variety of factors that are outside of an airline's control. This could be natural disasters like the pandemic, world events, or remembering that Cabo's a horrible place to take your family. The 2000s were a really tough decade for airlines for two big reasons: 9/11 and rising fuel costs. Today, American Airlines' parent company, American Airlines Group, has a market cap of $12 billion, which is back to levels seen in 2019 before the pandemic brought airlines to an essential standstill in 2020. But even 2020 is not the worst it's been. Worst it's ever been would be January of 2011, when American told investors that they had reported a loss of nearly $500 million the year prior. That caused such a windfall that by November, their stock fell to 26 cents, which is a 97% drop, and that ultimately led them to get delisted from the New York Stock Exchange by December. This prompted American to enter into a Chapter 11 bankruptcy filing. Now, for a lot of traders, bankruptcy gives you two options: either jump ship or buy the dip. Tom Handy, a 48-year-old Army veteran and writer who lives in Texas, chose the latter.
Hey Tom, thank you so much for talking to us. So back me up a little bit. It's 2012, American Airlines just went bankrupt, so why did you buy their stock?
I flew on American Airlines several times, and it seemed strange that they were declaring bankruptcy. I was in the military, on a flight through the military flying, or with a family, on personal reasons. I really didn't think it was going to go bankrupt. Another thing, I made the investment on behalf of my son, because I opened up a custodial account for him. So I made the investment in his account. It did very well within the next few years. I think it went up over 6,000% since then.
So how long have you been a trader in the stock market?
Almost as long as in the Army. It was funny, when my first year in the Army, my supervisor, he told me you need to start investing. And I said, I need to figure out what this investing means. So I sat down and started reading a lot of, this is all pre-internet really. So I was doing a lot of reading from Money Magazine, I think Fortune, and whatever magazines I can get a hold of about investing. And then I didn't start investing until about 6 months later in a mutual fund.
So let's go back to the trade. Why did you have so much confidence that American Airlines would even survive?
Well, I think after 2008, I saw a lot of companies, either some went bankrupt and the government helped out some of the other ones. And the stock prices were, just about all-time lows. And then I started seeing the price of a lot of stocks start slowly going up. So I invested in a few other companies at the same time. I know during that time period, a lot of people were kind of scared of what was going on in the stock market and really apprehensive about really putting any money and making any risky investments.
So Tom was partly right here. People were worried about putting money into the stock market because it was right after the 2008 financial crisis, which sent the market plummeting. And American did survive bankruptcy, but it wasn't because of a government bailout. Instead, during their bankruptcy proceedings, they merged with US Airways to create what is now their parent company, American Airlines Group. That, in addition to firing 15% of their staff and freezing worker pension plans. After the merger was announced in February of 2012, American Airlines stock started to rise out of the penny stock grave. The DOJ almost blocked the merger just for how big it was, but eventually the deal got passed and investors flooded into American stock, now under the fresh ticker AAL, which was listed at $24 when it first entered the market. That's a pretty big win for a guy like Tom who bought the stock at just 80 cents. But it got even better. Eventually, the value of Tom's stock grew by over 7,000% at its peak value of $58 in 2018.
So Tom, what did you do with the money after the stock went up by so much?
But I just left it in there, so it's still in there in the account with my son's name. They've already gone past that $20,000 mark, both of them. So they still have a couple more years before they'll really need it or go off to college or whatever they might want to do. So, and then my son jokes with me now, he wants to take the money and go buy a car.
So did the trade that you made with American change the way that you invest at all?
No, well, I still look for cheap or low price. I'll see, how it's where the high point was, where the low point was, and then see where it's at the time when I'm trying to decide if I want to invest in make that investment or not. I'm a high risk taker, even because I was young when I started investing. I said, everything you read says make the risky investments when you're young, and I still feel young, so I just kept making risky investments even now. So when I saw the American Airlines, the prices dropped so low, I figured it really wouldn't hurt investing in that.
Now, when Tom talks about risk, he's talking about putting money into a company that may or may not grow in value as time goes on. And that's pretty much what the stock market is. No matter what, there will always be a level of risk because a business's success could always fluctuate. It's like me and the crushing reality of being under 6 feet tall. It's always with me. Stocks and risk, me and being 5'8". They're always together. They're always together. But what Tom's banking on here is much more risky. He bought into a bankruptcy, basically guessing that American would survive its risk of implosion. Tom based his move on a hunch, having flown American before and trusting their planes. But if you look up some airline history, a riveting subject, I might add, you would see that basically every major airline went through a similar bankruptcy proceeding over the last decade and survived. But not every company does make it out of a bankruptcy proceeding, and stockholders are some of the first people to get burnt. The reason you haven't flown on Eastwind Airlines or Comair recently is because they didn't survive their bankruptcy filings. When that happens, they first need to liquidate their assets, pay off their debt, and maybe if there's enough money left, shareholders will get something back. But that rarely happens, especially for smaller companies. So there's some variation to how risky investing on a bankruptcy can be.
So Tom, now that we've heard your story, what is a lesson that you think investors can learn from you?
I mean, growing up, you always think you have to be rich to invest, and you really don't have to. I mean, it's so much easier to get into the markets now. You don't have to know a lot, as long as you maybe started with a couple, maybe $10 or $100, and then just watch how that investment goes after that. And I think as long as you do it on a consistent basis and put more money into your account, you'll see it grow over the long term. I'm not a day trader, so you're looking at your total portfolio as it grows over time, and so it always helps to have extra money invested somewhere that you pull on in the future, because you'll thank yourself, maybe 10, 20, 30 years down the road, even though today you may not want to, but it'll pay off, down the road.
So, as we mentioned, the stock market is volatile. But with Tom, we're talking stocks in an airline that just filed for bankruptcy. That's not just stock market risky. That's telling your friends you're not into Ted Lasso risky. Tom happened to feel okay there, but only with enough money that he was comfortable losing. So risk can vary in the stock market, but it all depends on where you're comfortable. And that's our point of return. Oh, and before you go, we talked a lot in this video about the value of stocks just kind of going up. And they do go up. A lot of the times they go up. But this has been a particularly crazy year for growth. And even though losses in the stock market do happen, you wouldn't be able to tell from just watching the news this year. So here's a quick reality check.
Unbelievable Wall Street gains. Here we have user Elon Ethereum, who posted this video showing he's up an incredible $6,500,000 on purchasing various Tesla call options. These expire around January 2020, and he bought these in April and August 2019 for a rough cost of $100 a contract, which now trades around $6,000 a contract. His initial investment is estimated to be around $50,000 to $200,000 for a gain of at least 3,000%.
Hey, this is Dan Toomey. Thank you so much for watching that video. If you liked it, go ahead and subscribe to Morning Brew's YouTube channel, and also hit that little bell beneath this video so you're notified every time we drop a new one. Thanks so much for watching.